Another creative way to invest in real estate. We've got it for you right here on the Fearless Investor Podcast. Hey everyone, you're joining me, Kyle Stanley, here on the Fearless Investor Podcast. And before we get to this episode, I want to remind you that if you have not already, make sure you go to fearlesskyle.com, download our Airbnb profit calculator. That right there will show you exactly what you can make on a potential short-term rental in your area, especially on Airbnb. And that will also show you how to be able to figure that out, exactly what you need to do to comp out the area to learn what your Airbnb could potentially be worth in your given search. So make sure to do that again, fearlesskyle.com, and you just fill out the form right there on the front and it will be sent right to you. Now, with this episode of The Fearless Investor, you know, I'm always trying to help you to get really new, fresh ideas on how to invest in real estate. And this is another way to do that. It's not a strategy of real estate. It is a vehicle in which you can put the money in that you're making and investing in real estate to be tax-free, to save money, and to ultimately be able to be a vehicle that is going to pay you in the future. So if you are looking for money now, and for that big check now, or for that passive income now, this is not for you. But if you are patient, if you're a lawyer, if you're a doctor, if you're a high net worth individual who is, or maybe even someone that doesn't need to rely on real estate for your income, this can be an incredible, just listen to the numbers that Jason Debono uses when he talks to us here on this episode. Listen to the numbers of how powerful this can be for your future, for your family's future in self-directed IRAs. Let's get to it with Jason Debono. Hey, we got a special treat for you guys today. Welcome into the Fearless Investor Podcast. You're with me, Kyle Stanley, and we've got Jason Debono coming in from Orlando, Florida. He's the vice president of NewView Trust, which if you're watching on YouTube right now, you see behind him, it is all about self-directed IRAs. Now, we've talked about this way back, probably almost close to like a year ago on the show, and I'm really excited to bring this back in because I've got a few investors that are using vehicles like this and just rave about them. And so I'm excited to really get into this topic of what it is, why you need it if you're a real estate investor. But first of all, Jason, thanks for being with us, man.
Hey, thanks, Kyle, for having me. Happy to be here.
Awesome. Well, hey, first question, what's your most interesting real estate investing story? I know you work for this company, but you also are doing investing on the side. So that's great.
Yeah, interesting question because I tell this story as the very first rental property I bought. I didn't know a whole lot. It was about 12 years ago, and we had a tenant in there, and everything seemed to be good. He was always a little bit late. It was a little duplex, and then couldn't get a hold of him. He stopped paying his rent, and we found out he was in jail. So it threw us for quite a loop. I had a partner that I did the deal with, and so thankfully we have I've got some, being in this business, some very smart people that gave me some good advice, and we actually had his son have him sign a release at the jail to allow us to terminate his lease early. But it was about a 45-day process, and it was, for your first property, it was almost enough to scare us away. But I think it got us excited enough to know that if we can overcome that, we can just overcome about anything.
You know, I once had it was actually the very first time I ever did Airbnb. So this will just be a learning experience for everyone, that you don't take bookings off of Airbnb from 0 reviews and 18-year-olds. But that's exactly what happened. And I was just doing it as a room out of my house. And these guys were great for like 3 months. And then when they went to the 4th month, they were like, hey, can we pay at the end? I'm like, yeah, that's fine. They were strapped on cash. They were having some difficult times. And basically they just disappeared one day and everything was gone. And I called one of them and he's like, oh yeah, I already moved to college. I don't have any money. And the other one is back. He is parole officer. He broke parole. He's back in jail. I'm like, wow. Okay. Well, never doing that again. So similar story there.
Yeah. Some lessons, unfortunately, you got to learn through the experience.
Yeah, exactly. Well, we now have ways to be able to get past that stuff and help other people get past it too now. So, well, Jason, I just want to kind of get to know you a little bit. What brought you to this world of self-directed IRAs and kind of the chicken before the egg or egg before the chicken? Which one happened first? Was it real estate investing or was it getting into this company? I would love to hear your story.
Yeah, I mean, honestly, it boils down to my dad told me I couldn't do it. That's the gist of it. I was a senior in college and I was looking for an internship to kind of get some real world experience. I stumbled upon this kind of, little startup company, 2 years old in Orlando. And when I say Dad told me no, I had no idea what the company did. I was on their website trying to figure it out, probably 30 minutes before the interview. I called Dad and was like, Dad, get on this website. I don't know anything about an IRA or real estate. Like, what the heck's going on here? And he said, oh yeah, I mean, you can't do that. I asked my broker about this, and he said you can't buy real estate in an IRA. And so again, Dad said no. I got really intrigued, and I went to the interview and learned, a lot like maybe some of you on here today are kind of learning for the first time, what's really possible. And I left there and called my dad and told him, and he was like, oh my gosh, he's like, this is incredible. I'd have been doing this, for the last 10 years if I knew it was possible. So I realized my dad's just like the average person out there. He's a hardworking man, works 70 hours a week, and is trying to find ways to build wealth. And he's used real estate on the side. Always owned a couple rentals here and there. And my dad's been a great client since, albeit somewhat of a pain in the butt, since he has my cell phone number and calls me randomly about self-directed IRA stuff. But yeah, it was. And so I got into it, and I've been really fortunate. It's become a great career, but more importantly, I've been able to really learn and understand how to build personal wealth through real estate and related investments, vicariously through our clients. So I'm fortunate to see lots of smart people like you that understand this stuff, and I can learn a few nuggets every time I get to have these conversations, and it's been a fun ride.
That's a really funny domino effect that you just mentioned there on your relationship with your dad. So, I mean, it sounds like you were interested in investing because he had always been investing on the side, and then you find this great company and he's kind of hating on you, and that leads you to going and actually like trying it, being a little bit of a rebel, I guess you could say. And then you end up turning him into a client. So
Yeah.
that's interesting.
Yeah, I think it's fair to say it's come full circle, and it's been it's been really cool. And I think the part that I learned the most in all of this, that was probably the thing that I take as being the most important thing, is I learned that there's 1,001 ways to make money on real estate.
Yes.
And I always thought the only way you made money on real estate was to rent it and then go clean up after tenants when they move out in the middle of the night, and do it again and rinse and repeat. And much like a lot of the stuff that you talk about, and I'm fascinated with your background from an Airbnb standpoint, because there's another way to maximize value in real estate while having tenants, but not dealing with this monthly long-term type environment. And it's really cool.
That's awesome. Well, let's take a step back. And you talked about when you went there and learned for the first time before becoming a part of NewView. What was it that you saw about this whole self-directed mingling with real estate world that kind of gave you those light bulb moments?
My dad was a big part of that, and I say that because it was his reaction that really helped me understand the kind of wow of what we do. And and I consider my dad to be a really smart guy. Like you said, he's a hardworking guy. He's been self-employed his whole life, always worked probably too many hours, and he's always tried to find investments on the side. I mean, I think he's chasing the dream just like everybody else. But it was his reaction, kind of like gosh, I tried to do this and thought you couldn't, been told I couldn't. And I love the idea of being able to do stuff that's different and outside the box. And I kind of looked at it and said, if my dad's feeling this way, how many people just like my dad are there in this world?
Right.
And it was a small company. When I started, we were tiny. We had about $60 million in assets, and we're almost at 1.5 billion over the last 15 years. So the opportunities there. We've got incredible opportunity as people, even in times like this. I mean, I think everybody's thinks they're a great a great stock investor because the market went down and it's gone back up, and you've got all these Robinhood investors and people thinking they figured it out. And I hate to say it, but it's a guessing game. It's like blackjack. And the real estate market, while it's not foolproof, it's not blackjack. It's not guaranteed to win, but the odds of losing, if you know what you're doing, are a lot less than they are in the stock market. And that's something that has compelled me over the years, and I think something that compels our clients.
Yeah, that's awesome. I totally agree on that. And, we always talk about other ways to invest as well, but 90% of what we talk about on the show is real estate because that's what I do. That's what I feel like is truly the most secure and honestly the best investment in terms of your return on investment over time, especially if you're patient. But my thing is right now, I want people to understand what is different about what you're doing and what you offer versus just a regular old real estate investment, um, a flip, a buy and hold, any of that. People can use what you have to increase their ROI. Now, can you kind of talk about that opportunity and just break it down in layman's terms?
Yeah, and I'll even throw some numbers on it to illustrate. So,
Perfect.
one of the things people think about is investments, right? Their first response is, how much money can I make? And that's a great thought, but it's really the last thing that you should be thinking about. Number one is, the first thought should be, how protected is my money, right? As Warren Buffett, puts it, the return of principal is a lot more important than return on principal. And so the first thing is, yeah, I mean, how do I protect the downside? The upside will come if my downside's protected. The second question is, how do I ensure that I maximize profits? And one of the things that people ignore is how much taxes cost you in your life. And
Hmm.
so we all try to pick the best stock or the best piece of real estate, but what we step over is this idea and notion that maybe there's a better vehicle. And the wealthy people in this world they're not stepping over that. They're thinking about that first. And so to illustrate, I mean, really what we do, and I'll step back, we help people use their retirement money, old 401k money, basically money that's earmarked for retirement in a tax advantage vehicle. We help them invest it outside of stocks and bonds. We don't pick their investments, but we provide the custody that allows them to go find their own investments. So if that's real estate, private notes, private companies, basically anything that doesn't have a ticker symbol attached to it, that's not readily available on a stock exchange. That's our business. But what value we bring, not only do we give you choice, we allow you to use the vehicle to keep more of what you earn. So I'm going to use a very simple example to illustrate in dollars. If you take a dollar and you double it every year for 20 years, so $1 becomes $2, the next year $2 becomes $4, right? It doubles every year for 20 years. At the end of 20 years, if you do it in a personal investment vehicle like your bank account, right? Your personal account, and you're taxed at 25% annually, right, as a
Hmm.
tax rate. When it's all said and done, $1 over 20 years, doubling every year at a 25% tax rate, is going to be about 75 grand.
Wow. Okay.
If you take the same dollar, right, invest it over the same period of time, doubling it the same way, right? So all things being exactly the same, but instead you decide to put the dollar into a retirement account because you know it's tax advantaged first. Then you make the investments. At the end of 20 years, you'll have a little over $1 million.
Wow.
So, when if you think the difference between making 12% versus making 8% is going to change your life, it won't. But the difference in paying tax every year on your investments and not paying tax every year on your investments truly will, to the tune of a dollar doubling 20 years being worth a million plus versus 75 grand.
That's amazing. I've never heard it broken down that way. And I just think that's such a no brainer way to really look at this is if, and correct me if I'm wrong, Jason, but what we're really talking to, who we're really talking to right now is the people that can afford to look at this money as I don't need it now, but I would like to have it in the future. And I would like there to be way more of it in the future. And I want to rely on my knowledge of real estate versus, or another investment, like you mentioned, an active investment, rather than throwing it in the stock market and hoping that my financial advisor will kind of push me in the right way. Am I kind of right on that?
Yeah, I mean, without a doubt, retirement saving is universal. Everybody should be doing it, right? I mean, anyone that thinks that Social Security is going to solve their problems at retirement, better really start getting used to eating ramen noodles and living like you're in college again. And maybe for some people
I
that
like
works,
ramen
but
noodles. I don't know about you.
I could cook them about 100 different ways still to this day. But that lifestyle was awesome in college. It's not the lifestyle I want at retirement. And
Hmm.
so it's universal. We all have that same problem, and we've got to put money away for the long term. And that's what a retirement account does. But putting it away for the long term doesn't mean we have to set it and forget it. It doesn't mean we have to put it in stocks and bonds, right? Because someone tells you buy and wait and hold it for the long term and it'll all balance out. Well, that's good and great, but you know what? I don't want to have to base my retirement on a peak or valley, right? I want to be able to make very conscious investment decisions. I want to be able to when the market, i.e. today, right, throws stuff in our face that we weren't expecting. I want to be able to make decisions and choices, and I want to be in the best asset class at that time. If that's stocks, great. If it's real estate, awesome. If it's mortgages, great. Even better. If it's private companies, no problem. But I want to be able to enter those investments, and I want to do it in the most tax advantaged way. And the only thing that offers that in a clearly defined tax code is IRAs.
That's awesome. Okay. So, let me give you a real life example. Let's say I use $50,000. I go start a new long-term buy and hold. Let's call it's going to be an Airbnb, and I'm going to cash flow $1,000 a month. What does that process look like? So I take $50,000 from my IRA. The cash flow's coming in. Do I have to put all of it back into the IRA? Do I get to control it? Do I have to pay back a certain amount? Is there fees? Just kind of give me like, what does that process look like if that is my scenario, my goal?
Yeah, so the first thing is kind of think of it like stocks, right? Because investments are investments inside a retirement account. They're different asset classes, but they all work the same. So if your IRA goes out and buys $50,000 worth of Microsoft and it goes up, you don't make any money personally, right? Your IRA does, and it's really not your money until you withdraw it.
Right.
And if you want the maximum tax benefit, you need to wait till after 59 and a half to withdraw it. That said, you can always pay a little penalty and taxes and withdraw it sooner. So you're not locked out of the money, but you have to remember if you're going to get the tax benefits, you've got to keep your hands out of the cookie jar, right? So from that perspective, whether it be stock or whether it be real estate, any of the gains, right, on that investment, if they're owned by the IRA, are owned by the IRA. It's the best thing for you, right? And I'm a big believer in protect me from me. I don't need the money in my bank account. I'm going to buy something I don't need. But if I put it into a vehicle I can't touch it, I'm going to keep reinvesting it. And it goes back to that wealth building philosophy. So all the money that your IRA invests is the responsibility of your IRA, and it's owned by your IRA. Any income from that property would be collected by the IRA, and any expenses owed by that property would be paid by the IRA. And the goal is to obviously build up that IRA as big as possible. And just know that if you did run into an issue, or you said, you know what, I want to go to Vegas and I just need 10 grand and I don't care if it costs me, a little bit of tax and penalty. I've done such you always have access to it. But just remember, it's a slightly more expensive pool of money because you got to pay a premium to unlock it early.
Now, a lot of IRAs have a max amount that you can put in every year. I think 5,500 is the one that's coming to mind. This one is not, it doesn't have a ceiling, right?
Well, it does under this auspice. So contribution limits simply mean how much money can you put into the account, right? And there are different plans. So the IRAs are actually now up to, I think, 6,500. Don't quote me on the number. 6,000. I don't look at them every day, but they're around there. But there's plans if you're self-employed where you can get up to like $56,000 into a plan every year. And that goes back to, you need to have someone like NewView in your corner that you can call and really understand this stuff. Because what people do is step over the plan stuff first. They get so hyper-focused on the investment that they lose track of these different plans that exist for them to contribute money or more money to. Once the money's in an account and you've met the guidelines and how much you've put in annually based on the account type, there's no limit on how much money you can make. So if you take $1 and you put it into an investment and it comes back $1 billion, right? First of all, tell me and I'll put $1 into it too. But there's no limit on earnings, only a limit on how much you take out of your pocket and add every year.
Got it. Okay. That makes sense. So if I've got, the same scenario, if I've got $50,000, but it's stuck in a, traditional retirement account where I can't invest it into anything except for stocks and bonds, what does that process look like? Is that easy to get it moved over to you guys as the new custodian?
Yeah, I mean, changing custodians is simple. It takes about a week, could take a tad bit longer, depending on where the money is and what it's invested into. But it's not a big undertaking. You got to fill out a little bit of paperwork from us, which will set up your account. Honestly, think of it like moving money from Bank of America to Chase. It's not a long process. It's pretty straightforward. There's no tax, no penalty to do it. It's just something that requires you to fill out a few forms with us, and then we'll go get the money on your behalf. If it's an old 401k, you'll have to actually request the money be moved, but that's more semantics
Okay.
than it is, gumming up the process.
Now, I want to take a step back because I realize I use the word custodian, and a lot of people probably don't know what that is. Like Edward Jones is a custodian, but they also are financial advisors. Are you guys strictly just the custodian and helping to facilitate that, or is there any sort of financial advising or consulting or connecting of any type to your clients as well?
Yeah, great question, and one that is important for people to understand. So an IRA of any kind requires a custodian. So banks can serve as custodian, trust companies can serve as custodian, right? Brokerage houses can serve as custodian. Um, any of those companies can also offer additional services. So in the case of Edward Jones, they offer brokerage, right? They offer advice and advisory services, as well as investments in the form of mutual funds and other things. So those companies tend to do their full service, but they're very limited. They're full service as long as you order off their menu.
Mm.
As a custodian, NewView is just custodian. So we are a passive custodian, non-fiduciary. We provide no investments, no investment recommendations, endorsements, or approvals. So, or any investment advice in the process. So a self-directed account means you get to make your own investments. So, take someone like yourself, Kyle. I mean, you've obviously spent a lot of time, energy in educating yourself, and it's paying off in the form of being able to use that knowledge and experience to go invest. So you don't need an advisor. You've got the knowledge where it's most impactful, which is in your own head. So for someone like you, we're a perfect fit because you understand how to make money. We understand how to help you keep more of it in a tax advantage manner. So you don't need the advisory part. And for a lot of the people on here today, whether you're an expert or whether you're a novice, I can tell you 15 years ago, I was a wet behind the ear, dumb college kid that didn't know the first thing about investing. It didn't take me long to understand it made sense and made tremendous sense. And, I love the name of your podcast because it is. I mean, what fear for some is a great motivator, but unfortunately for most, it's a debilitating, fear. And it's not hard. And when people say to me, and I love when people say, well, you can buy real estate in an IRA, isn't that risky? And I say, yeah, certainly risky. There's nothing risky about buying stocks in a retirement account, right? I mean, we somehow assume that if it's a Wall Street investment, it's not risky, but if it's a Main
Right.
Street investment, it's risky. And I think it's the total opposite.
Yeah.
Risk is investing when you don't control the outcome, you can't duplicate the winners, and you can't prevent the losers. Name a stock that you can time correctly on the buy or sell side. Name a stock where you can influence the outcome. Yet with real estate, I can influence all day long. If I want to get more out of rent, I got to make the property more desirable. Where else do I have that luxury?
Yep.
Right? It's not in Wall Street, it's in Main Street. And so, the knowledge and all of those things. So for us, our clients are the ones that say, give me the reins, let me go, get the knowledge and expertise, and let me go build my own wealth. Because if I'm going to build it through, these third-party stock brokerage firms, I can assure you, unless you're just a really good saver and you're lucky on timing, you're not going to get there.
Yeah, no, that's gold. I love that. It's just like what you were talking about. It's the blackjack versus the poker approach. One is luck, one is skill,
That's
and
right.
uh, and so that's awesome, man. What are some other investments outside of real estate that your clients will use?
So our overall kind of, I mentioned we have about $1.5 billion of assets. It's split about a third, and a third, not in exactly equal parts, but pretty darn close. A third is real estate. A third is private notes. So secured, unsecured loans, mortgages,
Mhm.
distressed debt. bond type investment, structured settlements, anything with kind of more maturity based terms would fall into that category. And a third is private companies. So, if you kind of think about all these, the Ubers of the world, they were all private companies once. And
Right.
we have clients that participate in a lot of these private offerings, and some go public and some never go public, but, it doesn't have to be a public company to be a good investment. And then, I don't know, there's about a 10% sliver of a ton of esoteric type things, that our clients buy: precious metals, gold, silver, platinum, palladium, cryptocurrencies, tax liens, tax certificates, a wide variety of things, but to a much smaller percentage overall.
Yeah, no, that's awesome. I mean, I have a few investors that I help to make money in real estate, obviously. And one of them uses a self-directed IRA to purchase the investments. And then I have another one who uses a self-directed IRA to just, like you said, the notes. He has either second mortgage on the property, or he is a lender, getting a guaranteed return. And so I see people all around me doing it. And honestly, Jason, I just need to move the money over and do it. So I think you've kind of kicked me in the butt to get this going. If other people are feeling that way right now, then where can they go to connect with you?
Easiest way to get us, and really as a good starting point for just some general information and continued educational content, is newviewtrust.com, with a U, NUVIEW trust.com.
Perfect. That's awesome. And we're going to have all that in the show notes too. So if anyone wants to be able to just get directed straight to exactly where they want to go, just go to the show notes. We'll have all that information here at the end of the show. Jason, thanks so much for being on the show. And I just want to give you the floor. Is there anything you want to say to our audience before we log off here?
Yeah, first of all, Kyle, thank you so much for having me. Really, really enjoyed the discussion today. I think, and even though we don't give advice, here's my advice to everybody out there, and that is, educate yourselves. You're taking the first step by listening to this podcast, and using your time, effectively, but get educated. Everyone that you see around you in any way, shape, or form that's built wealth in any capacity has worked their tail off, and they've gotten smart about what they do. And there's nothing special about any of those people, except for they just got out and did it. So get the education. That'll give you the confidence to go out and take a leap of faith. And if Kyle's story obviously is a leap of faith, right? And my story is to some degree a leap of faith. And I think anyone else would tell you it all takes that leap of faith for anything good to happen. So good luck in everything that you do.
9 times out of 10, people say just that when I give them a choice for a last word, and it's just take action. So those of you that are listening right now and have yet to take action, learn from successful people. 9 out of 10 people say just do it. So just do it. All right. Hey, Jason, thanks so much for being on the show and helping our audience to conquer the world of investing.
Awesome, man. Thanks, Kyle.
Show notes for this one, fearlesskyle.com/Jason. And that's where you can get all of the resources, all the links, and all of the show notes for this one. And make sure that, once again, you're just really listening to, is this the type of vehicle that you want to use for your real estate investment? Is it in line with what your goals are? And those goals would need to be more passive, more for the future. That's what a self-directed IRA is designed to do. It's helping you magnify your money for the future. So if that's you, go check out the show notes. Again, fearlesskyle.com/Jason. Thanks for joining us here on the Fearless Investor Podcast, where we're helping you to conquer the world of investing. We'll see you next time.